Welcome back, everybody. You got Will and I Man here from the Block Runner, and today we're going to be talking about Ankr.
It's on
Very,
quite a heater right now.
yeah, it's on a heater, and not only that, we sort of talked about a close competitor to it, which was Ramp.
Hmm.
And so, if you recall, if you watch our old video, Ramp was about staking your ETH and getting AUSD in return, or what's it called?
RUSD.
RUSD, the double dip project. And so,
Yeah,
so it turns out Ankr is doing the exact same thing.
yeah, but instead of like minting a stable coin, right? It's giving you a synthetic version of the ETH that you're locking up as collateral. Like
Mm-hmm.
today ETH, tomorrow could be Binance, Cardano, whatever.
Yeah,
It's just your staking assets, right?
yeah. So we're looking at roughly 7 billion tokens in circulation at a billion market cap. So if you go back and look at its run in 1 year, it's done 10,000%. And so you had a little bit of exposure in Ankr back in the day. And so what do you recall it was last time?
Yeah, it's interesting. The whole history of this project is interesting because I first caught wind of it maybe a year and a half, 2 years ago, and it 100% wasn't this. In the
Yeah.
sense that it started out as is their cornerstone feature or value add to the blockchain ecosystem was like a distributed cloud network service that leverages like already existing hardware from like big corporate entities or something like that
Yeah.
to provide like a reliable framework, I guess, for projects to use into
So,
the future.
yeah, decentralized computing.
Exactly. So that was the big pitch a couple years ago when we first heard about it. Fortunately, this was like a Binance only asset, and then at some point we got completely yacked from Binance because we're U.S. citizens, right?
Yeah. Good
So
old
that kind of
US.
yeah, that kind of ended my exposure at that point.
Yeah.
But since then, it seems like they've been doing a hell of a lot of pivoting, a hell of a lot of adapting to like, new trends, new emerging, sectors in this crypto ecosystem, specifically DeFi, you know.
Yeah.
And I think because of that, it was a very prudent strategy, prudent move as far as like development road mapping goes, like to do that because now they're
Yeah.
benefiting greatly.
So 1 year ago, since COVID times, it was at 5 million in change market cap. Now at almost a billion.
Yeah, pretty huge, dude.
Yeah.
So if you're able to buy back then and hold until now, you're doing well. But the reason to talk about it now is because it's in tandem with the project we already covered, Ramp. It's signaling what we talked about in that last video, about
Yes.
how there's like a new weird like DeFi angle happening where it's like things are becoming like values becoming expandable in the sense that you can convert assets into like synthetic assets and then use these synthetic assets to create even more value on top of that. And then we were speculating on that Ram video, like how far does this go? Can this just
Yeah.
go to infinity? We just create like synthetic on top of each other, right? And like when does it stop?
Yeah.
You know?
So let's talk about like what exactly is happening in this staking protocol that they've developed. So they
Yeah.
have the ability to stake your ETH, and in return of staking that ETH, let's say you stake 23 ETH or 32 ETH or 100, you
Mm-hmm.
get the exact same amount back in what they call a ETH. So you stake 100 ETH, you get 100 a ETH back. And so you could take this a ETH, take it to Uniswap, and you can swap a ETH with anything that you want, right? So what does that do? So as soon as you stake your tokens, you unlock a ETH, and as you're staking your tokens, you're yielding rewards. So this is an ETH 2.0 platform. So you're not going to get any staking rewards until after ETH 2.0 exists, right? After it's deployed. Once it's deployed, you're going to be accruing that staking reward. So while you're potentially degenning out on Uniswap, buying a bunch of other tokens, you can be, I guess, accruing the rewards for your staked ETH. Now, if you fail in your degenning efforts and you lose your tokens because, some shitcoin dumped, then you're going to have to acquire a ETH on the open market and then buy back your ETH from your staking pool, and then potentially make some money because you're rewarded with that staking, right?
Yeah, just reclaim your actual ETH,
That's
not
right.
a synthetic version of it.
Yeah.
But
So
it's a way for you to again double dip, right? Like you're still providing that collateral that the ETH ecosystem needs for, the ETH 2.0 vision and secure all the network operations and get rewarded for that. But yeah, the big dilemma that people are recognizing, projects like Ramp and Ankr are recognizing that is just a lot of dead capital
Yeah.
at work. You know what I mean? That can potentially be tapped into to still supply the ETH or any chain's staking ecosystem, with the capital it needs to sustain, but also give these people access to that liquidity to continue to do whatever it is they want with it.
Yeah, and the way that they describe it is as soon as you stake that ETH, it's a 1-to-1 ratio with AETH, and they're saying that 1 AETH is expected to grow in ETH value as it contains the principal stake plus the staking rewards. So as soon as you deposit 100 ETH, given a year, I think the annual percentage yield is around 7%, you would yield 7 ETH after that year of staking for 100 ETH, right? So that means your 1 AETH is worth 1.07 ETH upon that year.
Yeah, it's very similar to how Aave tokens work in the sense, right? Like whenever you're lending your capital and getting Aave tokens in return, right?
Yeah.
The yield that you're generating from doing that, for providing that liquidity, it's being added on to the actual A tokens themselves.
Right. Right.
Which is great. It's like that's a great user experience, right? You don't have to continually go in and like claim your rewards. It's just like it's automatically accruing.
That's right.
In your wallet, which is great.
So what does that mean in terms of strategy? I think it allows, so it's instant liquidity, right? So as soon as you stake your 100 ETH, you get 100 AETH. So of course you can take that and do whatever you want with it, right? And so in terms of strategy, this allows you to continuously use your liquidity for other purposes while in ETH 2.0's network, securing that network with your staked tokens, right? This is a proof of stake system. So you are contributing to the security of ETH 2.0 while you're potentially degenning out in the open market with other tokens. The only risk is that if you fail, you just have to, I guess, reclaim that ETH with other money, I suppose. Yeah, so like we were saying, that this is very similar to Ramp, and Ramp's take is it you stake USD or stake USDC and you get...
Well, Ramp is acting to kind of be the same servicing in the sense that you could take blockchain assets outside of the Ethereum ecosystem, bridge them to that protocol, and you're getting minted this stable coin, RUSD, which if you pay attention to their roadmap and the vision of what it is they want to build, they want to leverage that minting of this new stable coin to underpin a whole new DeFi ecosystem, similar to how DAI is like the bare bones ground level asset to all of DeFi, right? So that's kind of the difference in strategy here. Ankr is more leveraging what already exists, by integrating with things like Uniswap and SushiSwap. They're just allowing these already existent DeFi platforms to accept a ETH or all these coins, a Dash, a whatever. Right. To participate in their ecosystem. So Ramp strategy is a little different in the sense that they want to build these primitives out in the future, and potentially, a whole new ecosystem can emerge from that, which is pretty cool.
Yeah, I see. And then the other thing that Ankr does, so Ankr has a lot of use case, has a lot of products for us to use. And one of the things that they do is they provide you the ability to spin up a node for any given blockchain out here. And in a single interface, you can be running several nodes through their system and start participating in securing the other networks that exist out there. So this is pretty cool from the sense that if you're that type of person that wants to run your individual nodes because you're a developer and you need specific access to the data on that blockchain, this would be the place to do it. And if you look at some of these examples here, it takes money to run one of these nodes, right? We're looking at $17 per month, and you can pay up to 12 months, $182. So, yeah, I think if you're a developer, this would probably be the place that you're spending a lot of time on if you're going to be participating in all these chains. And look at here, Polkadot. So one of the things that they're exploring is integrating with the Polkadot ecosystem and a few others. Let me see if I have the article here. Yeah, Avalanche, Phantom, Polkadot, Flow, Near, and Solana.
Yeah, it's pretty big. So like obviously bridging outside ecosystems to the Ethereum ecosystem is a huge deal. You
Yeah,
know,
absolutely.
it's
And this is like a new thing. You were talking about how they were pivoting into this new stake, what they're calling Steakphi,
mhm.
and now they've recently just exploded. So this, you think, is the source of this run up here, right?
Yeah, it's just market realization of like how big of a deal that is. You know, cross chain liquidity providing
Yeah.
like bridging assets. You know, there's a ton of different projects working on this angle, but you know, I've identified in the past, you know, things tend to move as sectors. You know, if you look at Ramp has also been doing well over
Yeah.
the last couple of weeks. So I think the market's starting to anticipate this next phase of DeFi. You know.
Yeah, and I was thinking about how you're able to stake these tokens, and if you're staking them with ETH 2.0, then you're securing that network. We've seen a lot of projects where they're staking just to stake, just to increase the value of the token without actually doing anything. And
Mhm.
so this probably could be a composable component to projects in the future where not only are you staking for a particular reason on this project, but you're staking for the security of the Ethereum network. So this seems like extremely useful. And plus, this is a protocol that anyone can use.
Yeah, this is just like one of their like recent features, right? Like I said, they have a long history of like enterprise solutions for like
Right.
for other ecosystems to onboard their own users into like staking their own native token. You know what I mean? Like the Elrond network, for instance. Like, yeah, just go down this page, you'll see all the good partnerships and integrations they have. So Ankr acts as like a nice front level interfacing experience for the non-techies, right, to
Yes.
actually participate in this staking
Yeah,
economy,
that's right.
which is a massive economy. It's already 300 billion plus. It's only going to keep growing. Proof of stake is obviously like the model of the future, right? So as that economy continues to grow, whichever projects figure out how to unlock that, like today as dead capital, and like
Hell yeah.
continue to use these assets, for future DeFi expansion. I mean, fuck, dude, that's pretty big.
Yeah, and not only unlocking that dead capital that you're talking about, it's making it easy for the normies to jump in and say, "Look, I have a bank account with some money in it, and it's only generating me 0.1% per year." And now with the staking protocol from Ankr, I could be potentially yielding 7% on my money per year.
Mm.
And it's all right here, and I can stake with any of these projects here and get different yields.
And still get these synthetic.
And yeah, and I, dude, think about it. If you have like 100K USD locked up because you're afraid to spend it or whatever it is, stake it. You unlock that 100 USD, and you get the rewards for staking it as well.
Mhm. Exactly, man. So yeah, you asked the question like, oh, I can't what's stopping someone from taking that 100K synthetic asset and then just doing it all
And
over
then
again on some other
restaking it. Yeah,
platform?
yeah. Why risk
Yeah,
it in the degen market, right? If you could just restake it in another platform that will accept your a ETH.
A ETH and then mint you B
Yeah, B ETH, right.
ETH, and then some other clone is going to come out. We do C ETH now.
Yeah, yeah.
We'll gladly accept your B ETHs. You know what
Right.
I mean?
Right.
When does this end? Is this the beginning of like a the scrolliness of like finance?
Yeah.
We see these things happen in traditional finance. Like they sometimes can get out of control and balloon past like all reason.
Yeah.
Like you create these derivative products to kind of like simulate real value, and like the market can speculate on these things, and actually generate real value and real returns. So I mean, crypto just kind of like expands on that idea and like simplifies it and gives everybody access to these tools. And man, it's interesting, dude. Like
Yeah.
to think about where this is headed.
And somebody's going to do B ETH and C ETH and all that.
For sure.
It's going to be interesting because like you're saying, the derivatives market is the biggest market on the planet. And
Yeah.
the reason why it's the biggest is because people have concocted these ways, make transactions based on like futures and based on valuations on assets that go beyond like the underlying assets. So you can only expect that to happen in the crypto space, but probably at a 1000x like rate. if you're able to stake ETH and unlock a ETH, I mean, it could infinitely go into, you know, all kinds of directions. You would expect that from the crypto space for sure. But the fact that Ankr's doing it, and we have Ramp in a similar fashion doing that, Ankr seems like an established brand. That's why they have all these like partnerships already, like
Yeah, and
connected.
close affiliation to Binance. Like I like to call it the Binance cartel, just because of how powerful and influential this Binance network is. You know,
Yeah.
like if you go back in time and look back at all the like original Binance IEO projects, the majority of them are total titans at this moment. You
Yeah.
know, you got Matic, you got Elrond, you know, Ankr, you know, it's just Harmony. Like they just, I don't know, man. Like Binance just tends to have that kind of effect on this market, you know? So,
Yeah, it seems like Binance has the biggest grouping of eyeballs, and anything that Binance touches, it just happens to like explode. And that's why like PancakeSwap is doing a lot more volume than Uniswap is. Right? So, yeah, man, that's the power of Binance. It's a huge like launch platform.
true. So Ankr is definitely leveraging that, and they're making the right integrations because of that. You know, so it's just this one nice big ecosystem, you know, just turning into this titan. You know?
And all of a sudden you have this parabolic run up.
Yeah. But as long as the end goal is always bridge whatever's going on in the Binance ecosystem or Cardano or whatever, bridge it all back to ETH at the end of the day.
Yeah.
Not such a bad thing. You know,
For sure.
As long as they're all working together as opposed to competing and trying to crush one another, then we got problems.
Yeah, no, absolutely.
Yeah.
So yeah, that's Ankr. Let us know what you think about Ankr. Follow us on Twitter and the Block Runner. Like, subscribe, do all those things, and we will catch you in the next video.
Peace.